Did SoFi just turn into a meme stock? Ladies and gentlemen, I don't know, but it certainly moved like one. We hit a high of $10.57 and then hit a low of $9.63. So what in the world happened with SoFi stock today? We got to talk about it, guys. There is a big catalyst tomorrow that you need to know that directly will affect SoFi stock. So let's get into it. There is a lot to cover here in this video. The work is cut out for us. Hit the like button and subscribe to the channel. Let's get this channel to 1,000 subscribers. I appreciate every single one of you guys. And let's get this money, baby. So getting straight into this video. SoFi stock was down 3.65% to close the day, up 0.72% in after hours. At one point, SoFi stock was up close to 4%, pretty much ripping from market open. A little downside move in the beginning, and then it was a straight rip. So considering that, it's important to talk about what we need to talk about next, and that is going to be the big catalyst that is tomorrow, and it's actually PCE data that comes out. This is the inflation metric that the Fed pays closest attention to. A lot of the market participants pay attention to the CPI reading, which the next one comes out April 12th. Well, the Fed doesn't care about that as much as they care about the PCE, and that comes out at 8:30 in the morning tomorrow. It's expected to be about a 5.5% year-over-year gain. If it comes in higher than that, you're definitely going to see some downward pressure on the markets, and month over month, it's expected to come in at about 0.4%. As well as that, we have initial jobless claims that also comes out tomorrow, and that's going to be very important also because that's something the Fed pays attention to. The jobless data, the initial jobless claims, has historically been pretty damn good over the past year, so I expect that to be a kind of bullish thing nonetheless, but it's weird the kind of market that we're in. Don't underestimate the market's ability to see more jobless claims and react bullishly to that, because that will mean, hey, maybe the Fed won't move as fast. We know that's probably not the case. The Fed's probably going to act anyways, pricing in 9 rate hikes right now. But if this PCE data comes in way higher than expected, markets, they might start to realize, hey, we're in for a severe rate hike cycle, and we should probably prepare for that. Because I want to point this out. The markets have seen one of the best rallies we have seen ever in the history of the stock market. We gained 11% on the S&P in about 2 to 3 weeks, since March 14th at bottom, after the Fed meeting, which I expected the Fed meeting to be bullish, but not quite this bullish. But take a look at the Fed rate monitor tool. This is the projection for the rate hikes coming at the next meeting and beyond that, and it gives you the probability. Well, before the Fed meeting, we only had about a 20% chance to see a 0.5% rate hike May 4th, but what are we looking at now? A 66.1% probability of seeing a 0.5% rate hike. So maybe the markets just don't care about a 0.5% rate hike, or maybe the markets are not realizing that, hey, we're probably going to get a 0.5% rate hike. So I want to say the markets are pricing it in, but the way the markets have just been rallying to the upside, it doesn't seem like it all too much. So if CPI, see, I'm in the habit of calling it CPI as well, PCE comes in higher than expected tomorrow, the markets might start to look at this a little bit more and say, hey, wait, we're getting a little bit ahead of ourselves, and maybe the markets have rallied too much too fast. And that's my personal opinion. But then again, you already are seeing the markets that are pricing in very high CPI, very high PCE that last longer than what we had expected even a couple of weeks ago. So the markets are used to these high readings, or at least in theory they will be, but you just never know. If it comes in higher than the highest expectations, that's where you can really see the markets kind of start to freak out and try to price in even more hawkishness from the Fed. And that's why tomorrow is going to be such a big catalyst for SoFi stock. And that's why SoFi moved so much today. That's why it moved $1. Like SoFi to move 25 cents in a day is a pretty damn big move. To move $1 round trip, up 4%, down almost 4%, that's a pretty wild swing for the day. And it all comes down to that Fed rate monitor tool. It's at 67.2% probability of seeing a 0.5% rate hike. Like I said, earlier in the day, it had dropped down to about 63%. And then came back up. So this directly coincides with how SoFi stock moves, and tomorrow we're going to get more clarity on what the markets are really going to expect, if this is going to shoot up more so to 80 or 90% probability, or if it's going to shoot down to say 40% probability. That's the kind of clarity that we will see, and that will either help SoFi stock a lot or hurt SoFi stock a lot. And just so you guys are aware of, why the markets are going to pay so much attention to the Fed and SoFi specifically. Well, because, SoFi is mostly a lender. So if the rates keep going up, and they have dramatically, the mortgage rate is at 4.95%. It went up 0.5% last week alone. That's unheard of. Well, in theory, that should halter some demand that SoFi would receive for refinancing for new loans that they would initiate. Now, good thing is, SoFi is very diversified as a business. They own Galileo. They own multiple other things that bring in revenue from other places, from other streams, right? It's not all just lending, but even besides that, I think the markets are really pricing in too much bad news for SoFi stock, and that's ultimately a good thing. When the markets are too bearish on a stock and it does better than the markets expect, they start freaking out. They say, hey, we got to value this thing right. Kind of like the Big Short, where Michael Burry had a bunch of credit default swaps. They didn't want to value them correctly until they had their own positions on, right? The banks, once the mortgage sector started to fail, and then they were valued correctly, and then they shot up through the roof, right? So kind of the same thing on SoFi stock. It all comes down to market expectations and what the markets are pricing in. And the reason I'm so bullish on SoFi is really because the insiders are loading up on the stock. Like I said, if you guys have not seen this, here it is right here, under $10. You've seen millions of shares be bought by Anthony Noto as well as directors of SoFi. I know I've said that multiple times, but it's very important because especially right now, not a lot of insiders are actually buying stock. When a lot of stocks are down substantially, it's a very good sign, especially on a stock like SoFi at a $7 billion market cap that could easily 10x in the next couple of years if the business goes right. Then it's a huge sign and something to pay very close attention to, in my personal opinion. Now, it could be wrong, but that's definitely a good sign in my opinion. Now, as far as the option activity for the day, this is something else that I love to pay attention to because it shows you what people with more knowledge, likely that are smarter than you, that also have more information than we do, what they're doing with their money. They're not willing to throw money away like some other people are, right? Just on YOLO gambles. That's not really what hedge funds and institutional investors are in the business of doing. So when you see a lot of bullish option flows, you got to kind of pay attention to it. So for today, you're looking at about 18 orders totaling $1.69 million, positive order value of 85%. Over the past week, 63 orders totaling $16 million, positive order value of 63%. A lot of these $10.50 calls that are coming through, the last couple of minutes of trading today worth about $80,000 that do expire April 14th. So that looks like a very short-term bet worth about $70,000. So we'll see exactly what happens, but we do need to stay above key levels for SoFi, which we'll talk about right now once we get into the technical analysis. First, let's look at the short interest, and that's currently sitting at 17.33%, 125 million shares that are sold short, cost to borrow max of 3.54%, and again, for like 3 weeks in a row, the utilization is still at 100%, days to cover at 2.96. Now, you are seeing return shares for the day of 3.31 million, borrowed change of negative 2.67 million, so this is indicating some shorts actually did cover earlier in the day today, but take this into consideration. 3.31 million shares were covered today, but there's still 125 million outstanding, and we've seen a 4% move to the upside based off of that. So once the market environment really changes, and when you start to see the Fed slowing down its projected rate hike schedule or just cut rates, say we go into a deep recession end of the year, second half of next year, because they will ultimately cut rates again, that's when SoFi is going to be the investment you wish you had invested in. You got to have a long-term outlook on this, but at the same time, when that happens, you're likely to see a monstrous rally based off of massive amounts of shorts covering, because I really don't think shorts are going to cover in a massive way. Why do I think? Well, until then, I should say. And why do I think that? Well, I think that because a lot of these shares that are actually sold short, I don't think it's necessarily people that are overly bearish on SoFi stock. I think it's people that are trying to hedge out their long-term positions. I could be wrong on that, but that's kind of what I see. It's really hard to build a bearish catalyst or a bearish outlook on SoFi stock. I've tried to do it. You could say they spend too much money on advertisement, but they have such a good return on their advertisement dollars that are spent. You can't really make that argument right now. So that's kind of a rant on my thesis on what's going on with SoFi stock, what's going to happen tomorrow and what the real longer term sense is for the stock. So let's now get into the technical analysis. And I'm very excited for this part of the video because we did come up and obviously go above $10 per share. We got rejected back down under $10 per share, but the overall market today was not really in favor at all of anything risky. The markets, the S&P was down about 0.62%. The NASDAQ was down over 1%. So the markets definitely sold anything off that was really on the risky side. Even the Russell 2000 down about 2%. So it's not just SoFi stock that went down, it's the broad markets. And SoFi, you're seeing this specific resistance level around $10 per share. We've tried to break it once, twice, 3, 4, 5, 6, 7, 8 times now, and we've only closed above it once and then came back down the next day. So you've seen us try to break this 8 times. So when we inevitably do break it, that's going to be a solid level of support. So I'm very comfortable buying stock under $10 per share. Specifically, the longer SoFi stays just under 10, that's a bullish sign in my personal opinion of an eventual rally to the upside that is going to come. Now, the MACD is very interesting as well right now. It is bullish. It's bullish and quite substantially bullish. And you could tell because the yellow line is above the blue line. And when you typically see a crossover in the MACD, that's when you probably want to initiate a position or keep the stock really on your radar. And ever since we went bullish was this day right here, we were up 10.77%. But we fell 3% the next day. We were up 1.57% the next day, fell 3.6%, up 1%, fell 5%, up 2.66%, up, almost 10%, and then down another almost 4% today. And the MACD has pretty much only gotten more and more and more bullish. So this is taking in a lot of factors like volume, moving averages, so on and so forth to come up with these lines and this calculation to give you this pattern. So long story short, without getting in depth too much about that, I do think it's a solid sign that we will get a break above $10 here in the short-term future. The RSI is pretty neutral at about 48.24, a little bit on the oversold side, which is also another weird divergence. The MACD going more bullish, whereas the RSI is actually getting more bearish. Very, very interesting. You do not see that all too much. If we do break out above $10 per share, the main level is going to be $11.01. That's where we could see a little bit of resistance. If we break out above all of that, then that next level is going to be $13 per share. You have seen volume actually drop off, which is another bullish thing. When you see volume drop off, that's not bullish in and of itself. But if you see volume drop off and the stock actually maintaining and actually trending to the upside like SoFi has been doing, that is what is bullish, because when more volume does eventually come into the stock, if you're holding up with low volume and trending to the upside with low volume, imagine what high volume is going to do for the stock. You're talking a 15 to 25% green day that will eventually be coming to SoFi stock. That, of course, is only my personal opinion, and this video is not financial advice. Come to your own conclusions. Do what you guys gotta do. I am not your financial advisor, but I think this is just relaying the information that I am seeing back to you guys so you can come to an informative decision what to do with your personal position and your portfolio. Now, we also did get some news today that just recently came out that Russia did announce that they are going to allow for a ceasefire Thursday to evacuate civilians from Mariupol. I think I'm saying that right? Mariupol. Comment down below. Let me know if I said that right. But so that should be a bullish thing for the markets. I'll go ahead and actually reshare that. But nonetheless, you've seen some other, I guess, call it statements that came out earlier that Russia was not really withdrawing their troops from the designated areas, which they said, like Chernihiv and Kyiv. So who knows exactly? We'll have to see and wait how that does go. But there was also some talks about them using a chemical weapon or a nuke again today, and that's what really started to drop the markets as well, because apparently the top generals to Putin were kind of lying to him. That's the assessment that came out today, that the situation, they were saying it was going better than it actually was. So it's like, hey, what's Putin going to do now that he was lied to and that they're losing this war? Are they going to resort to some kind of weapon of mass destruction like that? I highly doubt that's going to be the case. Not very smart on their part. Then again, Russia has not been acting, very smart in the last couple of weeks. But nonetheless, be on the lookout for all of that. Overall, I think this is a bullish update, and I'm feeling pretty damn good. The last thing that I do want to point out for you guys is that the 2 and 10-year bond yields just did invert. So when this happens, it pre-forecasts a recession that is going to happen in the future. It always does. Whenever you do see that inversion, you will always see a recession either 1 or 2 years down the line. And why that is so important and why I'm bringing this up is because, yes, it's bad for the future, but typically you have about 1 to 2 years before a recession actually starts. And if you look, even during, 2005, 2006, that's when the yield curve first inverted. You didn't get a recession until the end of 2007. And during these times before a recession, you average about 19% on the S&P 500. So it's kind of like buy the stock market, buy the stocks, buy real estate until the recession comes, and then try to sell out when that happens. Kind of like timing the market. But nonetheless, we'll have to wait and see if we get another 19% rally in the markets. That would definitely be welcomed at this current moment. So thank you guys for watching. Hopefully you found some value out of this video. If you did, hit the like button and subscribe to the channel. Comment down below your comments, questions, or concerns that you have. But overall, thank you for watching, and I will see you in the next one.